All right, good afternoon. It's March 1st, 1:24 p.m. Eastern Time. I'm going to go through crypto. First, I want to go through Russian equities. The point I was making in my first two videos was now is not the time to buy the dip. Things can get a lot worse. That has certainly been the case. From here, um, I'm not a geopolitical strategist. I don't have people with boots on the ground in Ukraine or Russia or anywhere in Eastern Europe. I am privy to the same information that you are. My sense is that things can still get worse. They can still get much worse in Ukraine. Evidence of that last night, the bombing in Kiev was seemingly worse than it has been. We'll see. Sanctions can continue to get worse, though that the delta of that is probably less today than what it was. But still, the point with the main point that I was making with not buying the dip is that there was evidence that the economic backdrop was going to worsen in Russia regardless, regardless of this invasion. Certainly, the sanctions are strong enough that they will push Russia into recession. As you can see here, economic forecasts were for GDP to decelerate through 2022 and into 2023. CPI, same deal. That usually portends to economic weakness. And for an index that is heavily tilted towards value sectors, 85% energy, materials, and financials, this is not a place where you want to be buying, um, absent them invading another country. I would continue to stay away from this, um, really for the foreseeable future. Okay, crypto. So I've not really looked at much. Um, you know, maybe let's go to a few other macro assets quickly. So the U.S. dollar obviously has an outsized impact on how assets trade. A stronger dollar is usually a headwind to risk assets. That has certainly been the case in 2022 and for most of the last 6 months, 8 months. And you know, I don't really have a strong view on where the dollar goes over the next week or two. Um, if the economic backdrop that I expect to happens over the next few quarters, well, the dollar can get much stronger. It can probably easily go to the top of this range. We'll see. I don't have a strong view, but it's worth noting that it's been strong and it continued to strengthen. Gold is breaking out in spite of this, which is fascinating. Gold has broken out against virtually every other currency, except for the dollar. We'll see what happens. I would be interested if it sets new highs. Um, for now, there's been a pretty substantial move. It's probably not worth buying right now. Wait for news that weighs on gold maybe to buy in. Oil, $105 a barrel this morning, 107. Wow. Natural gas also pricey. Copper flirting with all-time highs. S&P still weak. Truthfully, it looks like it wants to roll over. Here, let's go to the 10-year. This is a fascinating chart to me. What typically, okay, so let's try to level set here. The 10-year, when the 10-year is declining, okay, it can be attributed to basically one of two things. An environment whereby we're entering into a recession and bond yields collapse. They're not collapsing. They are grinding lower though from these highs just a few weeks ago. I would imagine that this is an environment where, with growth and inflation likely decelerating for the rest of the year, that we've probably seen pretty close to the peak in interest rates. That is something that crypto would ordinarily enjoy, barring it's not a really bad economic backdrop. Um, right, kind of goes hand in hand with growth stocks, those supercharged growth stocks that have earnings that aren't going to be realized for several years down the road. They're pretty much just story stocks at the moment. Unfortunately, that's how Bitcoin trades. I mean, it's highly correlated to the Nasdaq 100. There's the Goldman Sachs unprofitable tech index. I mean, it's just Bitcoin. It's the Bitcoin chart. And so when interest rates are declining, those things can do well. So there's potential for Bitcoin to kind of catch a bid over these next few weeks if interest rates continue to move lower. However, there's the at the margins, it's difficult to predict how Bitcoin will respond if the lower interest rates are a consequence of moving into this period of economic weakness. I said in the last video, I talked briefly about crypto trades in these 60-day cycles, right? So if if this is the end of the prior 60 days, so day 0, you have your first 30 days, which is basically here, right? In between, you have a high, okay? That was on day 18, day 17, and you move into your day 30. You then revisit those prior highs, and then you come into a day 60 low. In order for Bitcoin to be bullish, it needs to set in this 30-day time range, it needs to set a high above this 30-day cycle high. If it can do that, it's what's called a right translated cycle. It's bullish. We'll see. My bias has been that that won't happen. Certainly didn't expect a 14% day. So, we'll see. ETH, this green line is really where it needs to go and close above for probably a few days. Same deal with Bitcoin. It needs to exceed these highs and then stay there for a period of time. It can't just go set a new high and then move in. It's not a reliable high. If that happens here with ETH, I mean, this is very bullish. I've said in my first 2 videos, I have been out of crypto. That would get me back involved in crypto. Avalanche is a protocol, a blockchain that is particularly fascinating and one that I would allocate towards for now, barring any shift from this bearish trend that crypto's been in to a bull. I'm going to remain out of that, but it would be one that I'm interested in. Cardano, this Cardano is interesting. It was started by I forget his name, Charles Hoskinson. Yeah, Charles Hoskinson, and he was one of the founders of Ethereum. Cardano its design is rooted in academia, and it's very impressive. I would highly recommend reading the Kraken Intelligence Report on Cardano. It's really fascinating. It's much different than the rest of um, the other layer 1 solutions or blockchain technologies. Importantly, this has been really weak, especially relative to Bitcoin. So it's not somewhere that I am looking to add anytime soon, but if it's a fascinating project. Solana, Jesus. Um, the main advantage of Solana is its throughput. It's significantly greater. It can process far more transactions per second than any other blockchain. So its ability to scale is particularly interesting to developers and in those that would like to be building DeFi on Solana. Near, it's a relatively new blockchain, um, one that I am particularly interested in. So this is another area. I like layer one solutions. They make much more sense to me. I struggle. So, you go through Uniswap or SushiSwap or Curve, these decentralized exchanges. Aside from tracking fundamental data like total value locked, new active addresses, it's really hard for me to come to conclusions, strong conclusions or a preference for one protocol over the other. And so I tend to spend more of my time studying blockchains, and um, Near is another one that would be interesting to me. Um, let's go to Matic. Matic is a layer two protocol called Polygon that is building on Ethereum, right? So I highlighted Solana. Its throughput is significantly greater, right? Its ability to scale or um, process transactions is significantly greater than every other blockchain, right? Ethereum gets to a certain point of scale, and as it gets used more, it becomes more expensive to use it, right? So gas fees go up, time to process transactions goes up. And so there have been a few ways in which the Ethereum community is building to, uh, resolve that. One of those ways is through the proof of stake, so moving to ETH 2.0. Another is through sharding. We can go through that in a different video. And a third way is through protocols like Polygon that are building tools like ZK, like Optimism rollups, ZK rollups that are building ways to take transactions off chain to um, increase the scalability of Ethereum. Matic is a protocol that I think is fascinating, offers a lot of promise. It has held up relatively well versus Bitcoin compared to some of these others, but still, I mean, it's barring a change in crypto being bullish, there's not really any sense for holding this, really any of these. Maker. So there's a number of DeFi protocols that I do follow. This is one. Maker is a collateralized debt program, kind of money market lending. Does a little bit of everything, but whereas Aave is a lending protocol, Convex Finance is a yield generator. Curve is a decentralized exchange like Uniswap. Um, all of these look pretty bad. There's not really seeing much evidence of bottomings happening, and so long as we are in this period of Fed tightening policy and deteriorating economic conditions, there's not really a good compelling reason to be involved unless you're purely focused on the long term and you're looking at this as an opportunity, and we're going to have different goals. I highlighted that in my first video. So we'll see. While these moves yesterday in crypto were significant, we still have a long ways to go before we're out of the woods in terms of shifting to a bullish. This downtrend breaks and we start back bullish. Yeah, I guess we'll see what happens here over the next few days. The 60-day cycle should end at some point around here, I think 28, 29, maybe as early as March 20th. But yeah, we'll see. We'll keep monitoring, and if we do set new highs, we should come in here. We should stay well above the beginning of the cycle low. So in here, and that would really set the stage for potentially revisiting these all-time highs. But for now, trend is down, and we'll go from there. All right, see you.